Hey everyone, welcome to this episode of Cash Chronicles.
Hello, everyone. Good morning, good afternoon, or good evening, wherever you are. My name is Ken.
And hi, my name is Sarina. So, today we'll be talking about something most of us will encounter in our day-to-day lives.
Life insurance. So, Serena, could you tell us a bit about life insurance? Maybe why we might need it?
Oh yeah, that's a fantastic question, Ken. As with all insurance, life insurance is meant to provide a sense of security should something happen to you. Perhaps in the case of your untimely death, you want to cover funeral expenses, pay off the house, or ensure your children's education is funded. Whatever your reason, life insurance is generally a good safety net for people who depend on you. As a bonus, tax-wise, life insurance payouts are generally non-taxable.
In Canada, there are two main types of life insurance: term life and permanent life insurance. Let's start it off by talking about term life insurance. Term life insurance is like, and the analogy I'll use here is like renting coverage. It protects you for a specific period, which is usually 10 or 20 years. It's cheaper and it makes it a very good choice if you have temporary needs, like, covering a mortgage or if you have to support young children. But the downside is that after the term is over, you need to requalify for that insurance and you might have to answer new medical questions and the premiums will almost certainly be higher. And the problem with that is, let's say something happens to you, God forbid, say you get cancer, you have a heart attack, some serious medical condition. It When you have those sort of conditions on your healthcare record per se, it becomes very, very difficult to qualify for any type of insurance. So if in your term something happens and you have to go requalify after the term is over, you might find that your premiums are very, very high, or you might not even be able to get insurance in the first place. Permanent life insurance, on the other hand, is like buying the coverage in this case, and it lasts your entire life. It is more expensive, and it's generally regarded as more so a form of savings rather than coverage because it is guaranteed per se. And there are also different types of permanent life insurance coverage, such as whole life, universal life, and participating life insurance. And each of them put a different spin, if you will. Some pay dividends, some allow you to reinvest a dividend to buy more insurance, and some even have the option to have dividends pay your premium for you when the amount of dividends that you receive equals the premiums. But this usually takes like a couple decades. And by a couple decades, I mean 30, 40, 50 years. There is a cash value to this, which you can borrow against. And because of this, terminated life insurance policies are usually considered an asset. But what I will say is that the insurance is more expensive and again, it is locked in. So for example, the example I'll make here is if you are, let's say, a 25-year-old and you're looking to buy term life insurance, right? A 10-year term for $500,000 worth of coverage might run you about $25, $26 a month, assuming you're a non-smoker. But on the other hand, like 100 grand of permanent life insurance coverage for that same 25-year-old might cost about 750 to $850 on average, depending on which company you go for. But then again, there are definitely many reasons to go for permanent life insurance coverage, which Serena will go over shortly.
Oh, that sounds wonderful, Ken. But the most important question with all of this is determining truly how much coverage you need. It's unwise to spend a large amount of money on life insurance that you likely won't use, but it's also unwise to have no life insurance cover you in the case of an untimely death or if something happens to you. So, generally speaking, when buying insurance, you should consider current debts like your mortgage, credit cards, and car loans. And also consider future expenses like your kids' education or funeral costs. There are online calculators to help, or you could perhaps work with a financial advisor to crunch the numbers. The best thing to do is to have a combination of term and permanent insurance. The term insurance should, at the bare minimum, cover your debts, and the permanent insurance should be seen as an additional buffer layer in the time of transition between your death and the future. Insurance is very important, especially if you are the sole breadwinner of the family, as in that case, if you are unable to work to pay for your family and provide them an unnecessary amount of stress while transitioning to a life without you. So, how should you find the best deal for your money? Well, you can do that by comparing quotes from multiple providers. Once you know how much coverage you need for life insurance, it's time to shop around. Canada has many reputable insurance companies, such as Manulife, Sun Life Financial, and Canada Life. You can use comparison tools like Policy Advisor or Cantex to get quotes and see which plan offers the best value for your needs. Those are a lot of important things to consider while choosing your life insurance policy. However, Ken, I think there might be something more important above all of this.
Yeah, Serena, it's very important to consider your budget when you're looking at life insurance, right? Like you said, life insurance is a long-term commitment, so it's very important to pick a plan that fits your budget, right? Like I said, term insurance is, yes, more affordable, and it's a great choice if you're younger or if you're on a tighter budget, but permanent life insurance offers a lot more guarantees, if you will. And while it does cost more, it is lifelong coverage, and there is a cash value that, God forbid you can't get a credit card or whatever. It is something that you can borrow and take out money against. But the key here is to always ensure that is to always balance affordability with also adequate coverage. So it's something that you have to constantly evaluate as you go along in life when you enter different life stages. And on that note, actually, there are things in insurance policies that are called endorsements, or sometimes they're also called riders. For example, if you become disabled, depending on what your insurance company's definition of disabled is, a disability endorsement will waive your premiums for a set amount of time, or even maybe for life if you become disabled. And there are also things such as accidental death benefit waivers, which basically provide that if your death is accidental, the payout is increased by a certain amount or multiplied by a certain amount, which is usually double. But it depends on the insurance company. And of course, these riders they do add extra protection, but they also do increase your premiums. So again, going back to affordability, it's very important to waive, what you're doing and also, what might happen. So, like for example, that accidental death benefit rider, right? If you work in a very, shall we say, higher risk profession, let's say you're a construction worker or what have you not, then you might very well want to consider that. There are also more important things when it comes to choosing your life insurance, such as evaluating the insurance company. Serena, do you want to tell them about that?
Oh, yeah, that's a very good point to make, Ken. Not all insurance companies are created equal. So, in order to find the best insurance company, you should look for one with a strong financial stability and a good reputation. You want a company that will be there when you need them the most. But generally, insurance is a very tightly regulated industry. So, if you go for a company with a relatively good reputation, chances are you'll be okay. Obviously, doing all of this research can be extremely challenging at times with all of the information that is available nowadays on the internet. So, what you can do as well is work with a broker or an advisor. An insurance broker or financial advisor can help you compare policies, explain the fine print, and find the best plan for your needs. They often have the capacity to work with multiple providers, so they can often find you a better deal than what you may find on your own. However, there's a lot of catches to this plan. Sometimes you might feel there is an incentive to not be so truthful about your current situation. Well, I think that there are a lot of reasons for doing so, but Ken, do you want to talk about some of the downsides?
Yeah, good thing, Serena. Good thing you mentioned that. So, guys, when you apply for life insurance, I know this sounds really cliche, but honesty is absolutely key. You got to be upfront about your medical history, your lifestyles, and any pre-existing conditions. Like, if you smoke, you better tell them that you smoke because failing to disclose this information can and absolutely does result in denied claims. And if that happens, you are going to leave your loved ones without the protection that they very, very much need. It's a very difficult, space to be in. And what I will say about this is even if you think you get away with it, even if you do get away with it, it is still insurance fraud, and your insurance company absolutely can, if they find out about it ever, they will absolutely try and claw back that money. They will file a lawsuit and take all the money back. So, yeah, definitely be honest about your health. But also, it's important to regularly review your life insurance policy. Like I said earlier, life changes, and your insurance should always change to reflect that, if you will. Like, for example, if you get married, you have kids, you buy a house, you retire, I don't know. These are all reasons to review your policy, right? And it's also, and you should definitely make it a habit to check your coverage, especially when you have major life changes. But while you're checking your coverage, You should probably also update your will at the same time. It's definitely important to have a will if anything happens to you. So always something to keep it out. And yeah, just make sure, whatever insurance you have, it still meets your needs. Like, if you don't have a mortgage, you don't have a car, do you really need a $500,000 life insurance policy? These are all questions that you should be asking. Just consider. All right. And that's pretty much all there is. So, Serena, are there any key points that you want to talk about before we wrap this up?
Well, not really, but I still think it's important to go over the fact that here we've said some of the things that might be important for you, the listener, while making a decision on whether to get life insurance or not. Feel free to do any further research online, as there are a lot of good sources of information there that might help you more than we can. So I think that's it.
So,
Thank,
yeah, guys, that's all there is to insurance. Thank you for listening to this episode of Cash Chronicles, and I hope to see you again. My name is Ken,
and my name is Serena.
and we will see you all next time.